Welcome to the Tax Factor Christmas Special from Blick Rothenberg, the official accountants of Santa Claus. This week with Santa's helpers, Heather Self and Nimesh Shah.
I'm Nimesh Shah.
And I'm Heather Self.
And welcome to another episode of The Tax Factor, the top 20 business and investment podcast that keeps you up to date on all things tax. So never mind 4 weddings and a funeral, it's been 2 budgets and an election in 2024.
It's our final Tax Factor of the year and our Christmas special. So as well as our usual roundup of topical stories, we'll be looking back at 2024.
But Heather, before we dive into all things tax for 24, that important seasonal question I have to ask you, is Die Hard a Christmas movie?
Well, Nimesh, I have never seen it, so I don't know.
Well, I know what you'll be doing over the Christmas break, Heather. But before you dive into the VHS of Die Hard, start us off. What's your summary of 2024? Was it a good year for tax?
Well, as in most years, it was an interesting year for tax. I was very pleased to see our first female Chancellor in, I think it's 800 years we've had Chancellors of the Exchequer, and Rachel Reeves is the first woman to have the job. However, I wasn't quite as impressed with her first budget. She was facing a difficult economic situation. She talked about her 22 billion black hole, and in fact, she raised taxes by a total of about 40 billion, which is a pretty major fiscal tightening. That's the national insurance changes in particular. But structurally, she hasn't done very much. We've got the business tax roadmap, which we might talk about a bit more later, but she hasn't done anything really to sort out some of the mess on things like capital gains tax. The big strategic change is the taxation of non-DOMs, and I know that's your specialist area, Nimesh, so I'll leave you to comment on that one.
Yeah, before we dive into non-DOMs, and I don't want to dominate the whole podcast on non-DOMs, but I thought Rachel Reeves really went to town in that first budget. The messaging around black holes and the dire state of the economy, I don't think it did her or the new Labour government any favours. And I wonder in hindsight whether they would have messaged it in the same way, because it has caused a bit of economic damage to the UK, and we're feeling it a bit just this week, where inflation now is notching up again to 2.6%, and the projections are, with that national insurance rise that's coming in from next April next year, that businesses are just going to simply pass on that national insurance hike and increase prices. So I wonder if the inflation tail also has some legs next year. Before I dive into non-DOMs, Heather, there was also another budget earlier on in the year from Jeremy Hunt, the last of his tenure as Chancellor before the election. And it was quite a different budget to the Rachel Reeves ones, because there was some national insurance giveaway for employees this time, the child benefit threshold going up. It was quite a positive message from Jeremy Hunt going into the election. He could have done more, but the thing that wasn't received so positively was non-DOMs. And I suppose that came as a huge surprise to me. I was caught off guard, really, that 10 days before the budget, there was all these rumours circulating that Jeremy Hunt was going to pull a lever on non-DOM reforms. I thought there might be a big consultation period. There wasn't. These rules are coming in from April 25, and it's set in, again, mad panic amongst the non-DOM community to say that they're packing their bags and they're jumping on planes and they're off to go. I think what's ended up happening over the next few months, and even though Rachel Reeves tightened up the rules a bit on non-DOMs, the reaction has been that actually London, the UK, is a pretty good place to live, and not as many non-DOMs in my experience are packing their bags, or they may just pack them a bit slowly and maybe leave the UK over a longer period of time. And that's probably a good thing as far as the projections are concerned on tax, because what I hadn't noticed up until doing a bit of maths more recently is that the non-DOM measures are going to raise 30 billion over the life of this parliament. That is a huge sum, and a far cry from the circa 3 billion that was always talked about in the Warwick LSE report when this concept of abolishing the non-DOM regime was talked about. So I'll be interested to see where those projections land over the next few years, and actually the reaction as well from non-DOMs and the reaction from the international community on whether the UK is still a good place to come and live, work and set up a business. So whilst non-DOMs will have been unhappy, working families may have actually been quite happy with the spring budget from Jeremy Hunt, because there was finally this increase in the threshold on child benefit, something we have been talking about on pretty much every single episode of The Tax Factor since episode 1. And we finally got our way. Someone listened, Heather, and Jeremy Hunt gave us that giveaway. And is this good news for families?
It is. It doesn't fix anything structural, but it has put the limits up. So the limit has gone up to 60,000 starting point. That's the income of an individual, not a couple. And it then tapers away up to 80,000. That's really just restoring the bands in line with inflation. He did talk about moving the charge to a household basis, which a lot of people think would be fairer. The trouble is you get the usual conflict between fairness and complexity. It might be fairer to charge the high income child benefit charge on a household basis. After all, child benefit is a benefit and most benefits are on a household basis. But it would mean completely breaching the principle of independent taxation. And it's one of the things that I think Rachel Reeves has had a look at and decided it's just too complicated. So it's going to stay on its current basis of individual income, the higher earning person in any couple. And a reminder that if you are potentially liable for high income child benefit, 31st of January is your deadline for paying that.
Yeah, and it's the old threshold rules, the 50,000 that applies still for 23, 24. So don't forget that. And a big fan of that change was Martin Lewis of moneysavingexpert.com fame. He wasn't so happy about pensioners, though, was he, Heather? And in particular, the winter fuel allowance. But there was some good news for pensioners this year. I think we forget that.
Pensioners has been quite interesting, I think. Clearly a key constituency, more pensioners go out to vote than other age groups, so you don't want to upset them too much. But I have to say, I think Rachel Reeves is prepared to take them on at the moment. The Labour Party, as the Conservatives, have agreed to keep the pensions triple lock. So the state pension goes up every year by the highest of earnings, inflation, or 2.5%. And that actually quite often gives a bit of a bonus. If inflation goes up one year and then wages go up more the next year, you get the highest in both years. So pensioners have done quite well out of the triple lock. However, what she has done is to restrict the winter fuel benefit to those who are claiming pension credit. And that's really only the pensioners on the very lowest income. And there's a lot of people on pretty low incomes pretty upset about that and ignoring the fact they have had the benefit of the triple lock. They do still get the Christmas bonus. That's still £10. So it doesn't even buy you a turkey leg these years, I think. Just this week, we did also hear that the government has decided, despite the Ombudsman's report, they are not going to set up a compensation scheme for the people known as the WASPy women. That's women who were born in the 1950s, who saw their state pension age go up from 60 to 65 or 66. There's been a long campaign fought by a number of those women, which I have to say I don't agree with. I just fall into that age bracket. I knew my state pension age was going up and I planned accordingly. They are claiming that they've been very badly done to because of that rise in the state pension age, but a number of courts have said, no, it's up to Parliament. Parliament can change the state pension age. What the Ombudsman said was that there'd been maladministration in the DWP who hadn't done enough to notify women. But this week in Parliament, it was announced that there wouldn't be a compensation scheme because it would be over generous to give compensation to everybody, and to try and do it based on individual circumstances would just be a huge administrative burden. So there's a lot of people upset about that. But it's interesting. I think the people who make the noise are not necessarily the majority. I think there's also a lot of people who think that's a sensible decision by the Labour Party. I don't know what you think, Nimesh.
Yeah, Heather, I think Rachel Reeves has been quite brave going up against the pensioners, and also this bold decision on the WASPy women earlier this week as well. It could have been quite different, though. Pensioners have probably had a bit of a mixed year with those things that you've talked about. But going into the election, you made a good point that pensioners do come out and vote in their thousands, and that doesn't go unnoticed by any of the political parties. Because when we started diving into the detail in the summer about what might happen in the election and those manifestos, that was an interesting time for us. There was no summer break, really, for the tax factor then. The Conservatives latched on to the pensioner vote, and they said that they would increase the personal allowance so that pensioners didn't have to pay income tax on their state pension. Now, I thought this was a viciously complicated way of dealing with that issue, but not everyone agrees, do they, Heather?
No, I don't agree with you on that one, Nimesh. And we always used to have an age-related personal allowance. The reason it got scrapped was that the general personal allowance got put up significantly, and so they merged the two together. It's something we could do. It wouldn't be that complicated because you just deal with it in tax codes, but I don't see the need for it. If someone's income is high enough to pay tax, then pay tax on it. And in fact, we're moving to a point where I think it's only about 46% of the population pay any income tax. And that means there's a lot of people who are not affected by the tax system and really want somebody else to pay the tax. I think if everybody pays a little bit, we all have more interest in making it work better.
We are allowed to disagree on the tax factor, Heather. What else caught your eye in the manifestos? Is there anything that really jumped out? Anything that you'd like to see Rachel Reeves take forward?
The one thing I was pleased to see is this business tax tax roadmap. I've been a fan of roadmaps for a long time. In fact, I claim to have first suggested them back in 1997. So really pleased to see that coming back. In fact, I'm part of a committee organising the IFS conference next year where we're going to be talking about the whole question of business tax and where it should go. So that's a really good start. We're also seeing a bit more money going into HMRC, which let's hope that's going to improve the service standards. That's something we've talked about quite a bit this year.
Yeah, and I've always said I'd love to see the money go into them answering the phones. That would be a big, big step ahead. And coming into January, those phone lines are going to be absolutely inundated with people wanting to understand how to fill in their self-assessment tax returns. So the other thing, Heather, that caught my eye in the manifesto was some of the more radical proposals by parties like Reform and Green. And look, I don't want this to be a summary of all those manifestos, but one of the things that Reform suggested, and they may be getting a big check from a very rich electric car entrepreneur in the near future, but one of the things they suggested was abolishing the IR35 rules. Now, actually, I've got a bit of sympathy here. I think this is a good move because there have been so many high-profile IR35 cases this year, and they seem to have been celebrities and household names that we all know and have been named in the press.
I think that's partly because those people are earning enough money to make it worth going to the tribunal. But IR35, it's a mess, and it's been a mess for a very long time. The underlying problem is that you can't have a clear definition of what's employment and what's self-employment. It all ends up being on the balance of facts and circumstances, which means it's difficult for people to decide. The underlying problem is the big difference in taxation between the employed and self-employed, and that's really down to national insurance. To give him credit, Jeremy Hunt made that a bit better because he reduced the employee national insurance contributions, and then Rachel Reeves put up employers' national insurance, which actually makes the situation worse. I saw a report this week that a number of major department stores are advertising for casual workers, and they claim they're all going to be gig economy people who'll be self-employed. I'm sorry, that's a nonsense. We need to make it so the tax system doesn't incentivize behaviour that gets round taxes, and that's what it's doing at the moment.
So lots of IR35 cases, Stuart Barnes, Eamon Holmes, Kay Adams, Gary Lineker. I think we'll see more IR35 tax cases over the next year or so and beyond, because there is no signal there that this is going to change anytime soon. But away from IR35 tax cases, our favourite on the tax factor, which is VAT cases. And there were some absolute crackers this year. What was your favourite?
I think it's got to be the Poppadoms. A very vehement argument that a Poppadom is not like a crisp, it's food. Unfortunately, the taxpayer company lost at the first tier tribunal, although they are going to appeal. If you'd rather have something sweet instead of savoury, you could have giant marshmallows. At the moment, they are held to be not confectionery, but something which is suitable for cooking, and therefore they're zero rated. Not surprisingly, HMRC are going to appeal that one.
So if you're having some snacks before your Christmas dinner this year, you want to avoid the Poppadoms and have some giant marshmallows, which leads me on to VAT for people's Christmas feasting. After Neil's incomparable advice on buying a rabbit for a Christmas present, so most of the Christmas dinner will be zero rated, but what about other things in the mix, Heather? What are the things that are going to be on your Christmas dinner table this year?
Well, I think my favourite has got to be gingerbread people, because those are zero rated, provided they don't have more than a couple of chocolate dots for eyes. So don't put too many chocolate buttons on your gingerbread people. In terms of Christmas presents, if you're feeling generous, Nimesh, you perhaps might like to buy your wife a fur coat. If it's rabbit, that'll be zero rated. You could go a bit more upmarket. They could have a goat fur coat, and that will be zero rated, provided the goat doesn't come from Mongolia, Tibet, or Yemen. And yes, there really is a flowchart showing the rate of VAT on fur products if anybody's at a loss for some Christmas reading.
I can imagine my wife is having a quick look at that flowchart right now. She very wishful thinking. And then speaking of wishes, then wishes for next year. You've touched on this, but tell us, Heather, what has 2025 got in store for you? What would you like to see?
More on the business tax roadmap and really making that a working and living document. There's a big area that hasn't been looked at, and that's how the tax system's going to have to change because of the transition to net zero. Rachel Reeves ducked the opportunity to raise fuel duty for, I think, the 11th year running, but sooner or later, the government's going to have to replace the revenue that it currently gets from petrol because cars are going to be electric. and that needs thinking about. What about you, Nimesh? What are you hoping for in 2025?
You said at the start, Heather, that 2024 was an interesting year for tax. I think it was an unbelievable year for tax. I've never seen such panic in advance of a budget, being Rachel Reeves' first budget. As I said before, the messaging around it from Reeves, from Starmer, from the new government wasn't ideal. And the activity that was going on amongst clients, colleagues, friends around what they were going to do about capital gains tax, gifting large sums to avoid any inheritance tax hike. You mentioned the other week about people rushing to take pension lump sums out of their pensions and now in a bit of a mess around that. I thought the speculation was deeply unhelpful, and the action that people took was just crazy. You've got to plan with the law, not on speculation and rumours. So I really hope that next year it'll be calmer. I really hope that government has learnt from the damage that it caused around that speculation. And as the Deputy Speaker of the House of Commons said in advance of Rachel Reeves' first budget, which took the wind out of her sails a little bit, the government need to be careful about not setting the budget through the press in the weeks running up to it. So I hope that it'll be a more stable system going into 2025. And we do have now a spring statement at the end of March, and we've been told that is very much a statement, but the press can't get away from it. They're saying that Rachel Reeves is going to have to make some tax announcements in that spring statement. I hope that is not the case. So for me, Heather, a calmer year in 2025 and a bit more of a stable tax system.
A stable tax system sounds like an appropriate thing for Christmas, really, Nimesh.
Let's see what will be in my Christmas wish this year.
The Tax Factor Christmas Special.
Heather, we're nearly out of time on this episode of The Tax Factor before we head off to Tax Factor Christmas drinks and a mingle, but not with any vatable snacks, of course. But just before we go, we have got a bit of time for some fun. So please, can you pull the other end of this cracker?
Why are the Houses of Parliament like ancient Bethlehem?
Oh, you've got me, Heather. Why are the Houses of Parliament like ancient Bethlehem?
Because it would take a miracle to find 3 wise men.
Oh, that's quite harsh, Heather. One more then before we head off. Do you want to take this cracker? My go. What does Santa spend his wages on?
I don't know, Nimesh. What does Santa spend his wages on?
Jingle bills, of course. And I don't want our resident Stig to be feeling left out at Christmas, so one for our mysterious voiceover guy.
Which superhero pays no tax? Spider-Man. All his income is net.
I think that's actually worse than the one he told last year, which, if you're interested in, is episode 21, available on our website. My thanks to Heather for joining me this week and indeed throughout the year. I'd also like to thank all of our Blick Rothenberg team who have been guests on The Tax Factor or behind the scenes helping produce the UK's top tax podcast. I'm delighted that The Tax Factor made it into the top 20 podcast chart, and thank you for listening and leaving all your 5-star reviews. And before I go, finally, I can confirm, Heather, that Die Hard is definitely a Christmas movie. There's a tip for you for Christmas.
Thanks for the advice.
Thank you very much. We're taking a break for Christmas, but the Tax Factor is back in the new year on Friday, January the 10th, and then every Friday as usual. I said at the end of last year's podcast, I'm sure we're going to be in for an interesting 2024, and I've got no doubts that 2025 is going to be just as interesting, with the return of Donald Trump to the White House and the second budget of the new Labour government.
You can listen to all of our previous episodes of The Tax Factor on the Blick Rothenberg website and all good podcast platforms. Please do check out our sister podcast over the festive break, Brave Business, hosted by journalist and broadcaster Declan Curry. The latest episode looks at neurodiversity in business. Joining Declan to discuss this topic are Blick Rothenberg partner Gail Cobley, with our guests Ben Branson from The Hidden 20% and Binna Candola from consultancy Pern Candola. Until next time, from Heather and myself and the entire Tax Factor team, it's goodbye. And whatever your plans are this holiday, have a great Christmas and a prosperous New Year. Merry Christmas, Heather, the last one of 24.
Merry Christmas, Nimesh.
Have they gone?
I think so.
I'm Kerr.
And I'm Celia.
I'm Michael.
Kerr does all the technical stuff.
Celia arranges all the guests.
And we're all not quite sure what Michael does.
Michael does everything.
But you can't keep Neil and Roger to script.
So, are you ready? After 3, 1, 2, 3. Happy Christmas.
Hey!
That's all for the Tax Factor from 2024. If you enjoyed The Tax Factor, please like, share and subscribe. We'd like to thank you for making us one of the UK's top 20 podcasts. We'll be back on January the 10th and then every Friday with the latest tax news and updates. The Tax Factor from Blick Rothenberg.